TV18 completing 26 years.
Let's just keep it that.
Parikshit is here with more on Putin's agenda for New Delhi. Parikshit.
Keep chasing the sunshine and go out and play.
Happy 26th birthday.
भी लगाएगी तू?
देखो है तो देखो.
Happy 26th birthday CNBC-TV18 from the crown.
लाइन दिखाते रहना, वो इन लोगों का बोर्ड दिखाना, ठीक है?
Listen, I wanna be there with you no matter where you go. Life is a table for two, and we're starting the show. I'm gonna spread my wings and fly so high up above the clouds.
Simple.
Well, happy 26th birthday to all of you, all our viewers, to all of us. Nigel, Reema, morning. Happy birthday.
Happy birthday, guys. And today is not just any other Monday morning, right? It's a milestone. It's 26 years of news, analysis, bull markets, recession, policy shifts. We've seen war. We've seen technology disruption. I think CNBC TV18 has lived through it all. And thank you to all our viewers.
Well, that's right, 26 years. I'm so excited. Goosebumps, guys. 26 years. I've been happy to be part of the family since CNBC TV18 went into double digits. Been here for 15 years. Thank you to all the viewers, and since the morning, whether it was the dress dada or the makeup person or our PCR team who's talking to us in the year, well, whoever you asked, they said, we have been here 15, 20, 22, 23 years. So we have evolved as a channel, and we thank all of you all out there. What a journey. I love you, CNBC TV18.
That's nice. And I guess one of the reasons why this place is special is because the teams are almost, it's unbroken from so many people here, as you said, 10 years, 15 years, 20 years.
I've been here longer than both of you.
Put together?
Without sounding old and giving away my age, but I've been here longer.
Just to carry that forward.
Quick game. How old were you? 20? No, okay, I should ask you that.
We've come here as spinsters, bachelors, got married, had our kids, seen each other evolve over here. CNBC TV18, what a special place. Glad to be part of you, and let's go from strength to strength. And thank you all our viewers, because without you all, we wouldn't be here.
Indeed, thank you for watching, thank you for believing, and thank you for making CNBC TV18 your window into the markets for 26 whole years.
Oh, absolutely. And I think, why not rewind the clock back a little bit, right? And just look at the journey that we have traveled together. And that's what we're going to do here. 26 years ago, CNBC TV18 went live. And India's markets were a completely different universe. Even as we sort of complain about how this year has been a tough year, why not take you back 26 years to tell you the shape, size, structure, and of course the returns that we've seen together during this incredible period. Let's take a look at the massive reset which is played out. And let's start by looking at the size of the market itself. From under 5 lakh crores, which was the total market capitalization of the NSE when CNBC TV18 started, to now over 470 lakh crores in market cap. It's been an incredible 100-bagger in 26 years. Just look at that. 4.9, not even 5 actually, from 4.9 to 472 lakh crores now. So that just tells you, I think so many things go into that 100-bagger, the making of the 100-bagger, right? But let's look at some of the numbers. The number of companies listed has also grown nearly 5 times in this period. Look at the growth that's a number, 648 companies in 1999, 2,883 companies as we speak at this point in time. Trading activity, right? This is cash market daily trading activity. Used to be 1,650 crores 26 years back. We are over 1 lakh crores in daily average turnover as we stand. Well, perhaps the biggest structural change, the financialization of India. If you look at mutual funds share in household savings, and I sort of went back and looked at data from when it was available, it was 0.9% in 2011-12. I couldn't get data all the way back in 99. It stands at about 6% plus in 2000 as we wrap up 2025 today. And of course, I mean, you know, as many, and we also believe that this journey is just about starting. From barely 20 lakh demat accounts in 1999 to more than 14 crore demat accounts today. And these are unique accounts, investor accounts that I'm talking about. The journey's been incredible. From almost no SIP culture, systematic investment plans, that's basically become the bedrock, the foundation for the money which is coming into this market, to now basically every month crossing 20,000 plus crores. This is a market no longer owned just by institutions or only by institutions. It's a market largely owned by India's households. Let's go back to the Nifty 50 itself, right? I mean, the OG, as the youngsters would call it, before the Y2K hit. 50 names that told the story of old India. You can see it. Do you recognize some of the names? There's Ranbaxy there, there's MTNL there, so many PSUs. OBC, Oriental Bank of Commerce, as you can see, was part of the Nifty. IDBI Bank was part of the Nifty 50. EIH Limited. I mean, the composition has changed. That's what the Nifty looked like 26 years back. Now, of course, it's different, right? There are, by the way, only 17 of the 99 Nifty 50 constituents which survive today in the Nifty. On your screen now, the survivors, the 17 of the original, which are now part of the Nifty as well, as we look at it at this point in time. Now, let's just take a look at the, the size of the average company in India, listed company in India. Look at large cap, mid cap, small cap. What I've done is I've taken the current definitions of what is a large cap, what is a mid cap and small cap for comparison's sake, like comparison's sake. So top 100 is large cap, next 150 is mid, that is mid cap, and everything, after that, which is 251st onwards is small cap. Let's take a look at this. In 1999, the top 100 companies made up 87% of the total NSE. It's 60% right now, right? That's one. The largest stock back then in 99 used to be HUL with a market cap of 50,000 crores. The largest company is Reliance with a market cap, not current, but at the end of November, is Reliance Industries, 19.5 lakh crores. So basically, what I've done is I've taken average market cap for 3 months, back in 99 and for 2025 as well. And that's Reliance at 19.5 lakh crores. Now, mid-caps make 20% of the NSE now, while back in 99, that is 26 years back, they were just 9%. The largest mid-cap used to be Gujarat Gas with just an 800 crore market cap. Think about it. Largest mid-cap, 800 crore market cap. The largest mid-cap today is 125 times that, DRL, with 1 lakh crore in terms of market capitalization. Small caps now make up 20% of NSE today. Guess what they were? 4% back then. The largest small cap was a company called Foseco India with a market cap of 150 crores. We are talking about tens of thousands of crores for small caps now. ACC with 35,000 crores in market cap today is the largest small cap in that sense. I'm just going by SEBI definition as it stands right now. Well, markets ultimately follow earnings, and India Inc.'s earnings story tells you why this bull market is legs. And I think the numbers will come up. And I've just looked at phases, right? Between F5 of 2005 and 2010, EPS grew at a CAGR of 11%. Then came pretty much like a lost decade, which is F510 to F515. There was just 3% recovery, followed at 6% between F520 and between F515 and F520. And then, of course, we've seen this COVID and post-COVID breakout. EPS has grown at a CAGR of 20%, nearly 20% between F520 and F525. This is the strongest earnings acceleration in 2 decades. I will end with an asset class return table over long-term equities have delivered. The Nifty is compounded at over 12% for 26 years now. That is the CAGR. It's beaten gold. It's beaten, of course, fixed income as well, basically beating every other traditional asset class That has been the compounding story as far as equities is concerned. So that's a 26-year journey. Just a brief look back at, and there are so many ways to do this, but I just looked at a few matrices which tells us the story about what has happened over the last 26 years now, and what an incredible journey it has been. Well, Nigel has walked across to the, okay, I think, Rima, next 26, you want to take a shot?
But it's absolutely incredible, right? Markets were so much smaller. Information didn't move as fast, much slower.
Yeah.
And India's investing culture still hadn't taken shape. But that's been the journey over the last 26 years. And CNBC has helped shape so many of those conversations which made those decisions. But a quick check on Asia before we get to Nigel. Asia is a mixed picture this morning. You've got the Hang Seng, which is down about 0.5%. Nikkei is flat. We had the July to September the GDP print, and that disappointed for Japan, coming in at a contraction of -2.3%, worse than what the street was anticipating. But on the flip side, Taiwan is holding up 0.6% higher, and Kospi, which has had a banner year with a 70% up move, continues to chug along higher. GIFT Nifty, on the other hand, is pretty much flat. But Nigel, what are you looking at?
Well, over the longer term period, if you look at the last 26 years, on an average, you get returns of close to 11 after around 12% on the Nifty, which isn't bad. And hopefully the next 26, we can move maybe to mid double digits as well. So that's just about history. What happened in Friday's trading session? Well, you had the institution numbers that were positive. Yet again, the FIs were mild sellers, not too much though on that front. The FI data actually in the futures market is encouraging, because if you look at the stock futures, they added more longs than shorts. And even on index futures, well, they added more longs than shorts. Remember, this market is still net short, with more than 80% of the positioning on the short side on index futures. So you have shorts in the system, and now the data points that are coming in there, both on the futures data, as well as if you look at the option side, they bought more calls than puts, and they wrote more puts than calls. So that's giving you a sense that maybe, in fact, in the near term, even the FIs don't expect the markets to see a big correction from here on. Quickly moving to the options data, then you had a couple of strikes that were very, very active. The 26,400 call, good amount of open risk build up. That appeared there was some out of the money call buying out here. So, someone taking a bit of a pound, if you get that trade deal, or if the markets want to take off from here on, then you'll make some money on that front. And the 26,000 put, from the start of the week has been seeing a lot of writing. At the start of last week, the premium was close to around 100 rupees. That's come down to around 20 rupees, which is telling you that 25,900, 26,000 markets extremely important on the downside, while the recent high at around this 26,326, that becomes a near-term resistance. The Nifty Bank, that's the one that's been leading the way. And now you have the 20 DMA, that's at around that 59,000 odd mark, so close to around 750 points away from current levels. A couple of stocks that we'll be tracking in today's trading session itself. You have Keynes Technology. I recall in the final hour of trade on Friday, I said there's a possibility that this one goes into the F&O ban. Well, that's precisely what's happened. It's moved into the F&O ban. Massive selling that we saw. Remember, they have a con call, so we'll keep an eye out on this one, whether or not the management can come out with some clarification. And a couple of other names that have newly listed. The lock-in period does open up. Close to 2% of the total shares that are outstanding. They are eligible to be traded. So Pine Labs as well as Lenskart, because of the unlocking of that cool-off period, shares will be freely tradable. So I'll keep an eye out on both these two.
Indeed, for Pine Labs, about 500 crore is available. The lock-in ends. And for Lenskart, about 1,700 crore. But it's going to be such a busy IPO week. We've got a rush of IPOs, 5 of them. One of them is Wakefit. They're looking to raise about 1,288 crore. Corona Remedies, Nephro Healthcare, Park MediWorld. And the big one will be ICICI Pru, which is looking to raise about 10,000 crore rupees plus. IPO opens on Friday. But lots to track, plenty of action with the Fed, the INR, what's happening with single stock actions like Biocon and Interglobe Aviation. So straight away, let's first talk about the global macros. Drew Pettit, Director of US Equity Strategy, ETF Analysis Strategy Research at Citi, is now joining in. Drew, great to have you. Thank you very much for joining us on this special day. CNBC TV18 turns 26. Well, the big event to watch will be the Fed outcome. Wednesday night. So India reacts only on Thursday. But it looks pretty much like a done deal. We're going to get that rate cut. Will it be such a market-moving event? And what would be the signals you will watch, considering that perhaps next year you will be having Kevin Hassett at the table?
Yeah, so first off, I have to start with happy 26th birthday to everyone at CNBC TV18. And look, just to jump right into it now, like the Fed, 25 basis points for the next meeting is probably priced in by the market. we saw the market price that out leading into December, and that's been priced back in. What we really want to watch out for is that path of cuts into next year. Our economists and team expect 25 basis points, I believe, at the next 4 meetings after December. But the key to us is, do we get those cuts? And are we actually going to get weakness in the U.S. economy, or will it be resilient? If it is, that's a soft landing setup for next year. You should get follow through, not just in the growth side of the market, but some of the cyclicals where earnings growth might actually improve as well. So to us, that soft landing narrative is really key to broadening beyond just mega cap growth in the United States.
Drew, hi, good morning. S&P is up 12% year to date, 17 days to go to wrap up 2025. Typically, I mean, trading activity, etc., trails off, starts to drop off when, Drew? I mean, 10, 15 days usually is like a bit of a, low volume part of the year, right?
Yeah, that's pretty typical. And it's funny, everyone talks about seasonality, that you get this rally into the end of the year. In a sense, you're not going to get a lot of new data. So whatever people have been trading, they do continue to trade that way through the end of the year in the United States. To us, look, sentiment's very high. It's very strong. It's been like that for about 6 months now. And that's unlikely to break. That probably means the S&P 500 is going to end up something, I would say, above our base case that we set in mid-year. And it could threaten our bull case of 7,000. Look, somewhere between 6,600 and 7,000 feels about right for the S&P. Again, you probably don't have a ton of news outside of the Fed to really change people's behavior in the last 2 weeks.
All right. Hi, Drew. Good morning, and thanks a lot for the birthday wishes. I thought you'll do a little bit of a jig for us, Drew. You know, it's our birthday. But getting back to the markets, I think your preference was developed markets, right, over emerging markets. Do you stick to that? And where does India feature in? I think you were talking about a better entry point. Do you think that entry point has come about? India has gone through a long period of underperformance, and a bit of consolidation.
So I'll start with the last question first here. Look, we're still neutral on India. The last time I was on, we talked about a really good growth setup. I think you guys touched on that in your open to the show. Look, that hasn't changed. We still believe the growth story. The valuation story also hasn't changed. So you have priced in a really good earnings and growth backdrop for India, so it remains neutral to us. But more broadly, we're actually overweight EM in our global strategy in our allocation recommendations. So look, we pair Europe ex-UK as the cyclical area of the world we want to be overweight. Think there's inflecting growth there. The whatever it takes moment has kind of happened or at least been talked about in Germany, for example. So we like those markets for value. On the growth side, EM is actually a way to get growth in AI exposure at a pretty reasonable price. And we lead the overweight in EM with China and South Korea. When you look at some of the names that screen in our AI at a reasonable price basket, you're going to get names like Baba, Tencent, SK Hynix, and Samsung even. So look, you can get AI at a reasonable price in EM, China, South Korea. That leads our overweight there.
Okay, so China, Korea are overweight on account of the AI exposure. India is a neutral. So your thesis is that tech momentum will continue into 2026. And back to India, what does the currency weakness signal as macro indicators? I mean, that's one of the reasons why India has had one of the worst years of underperformance versus other emerging markets. MSCI India is up 2%, while MSCI emerging market basket is up 27%. That's an underperformance of 25%, and partly on account of currency.
Yeah, look, I'll keep this high level because, again, equity strategist here with you, but the tie together here is perceived tariff risk. And that's relatively high when we look at our models across EM. It's higher for Mexico. It's higher for India. I think the first relief valve for tariff concerns for any trader, global macro traders, is going to be the currency.
Drew, we'll leave it there. Thank you very much for coming on. Appreciate your time here on CNBC TV 18. And wonderful speaking with you, as always.
Great seeing you all. Happy birthday once again.
Thank you very much. Thank you. Markets here, as we look back at 26 years, and I started by saying that even as we complain about how tough this year has been, and this year has been pretty tough.
True.
I mean, it's only fair that people at the S&P is up 12% and people there are also complaining. Here in India, in rupee terms, we're up 2% for the year. So there is actual real cause for concern, and especially in the broader market. People are a little frustrated, and that common refrain is that paisa nahi ban raha hai, right? I mean, I think, so you need a trigger, and that trigger which markets were waiting for is not materialized is the US-India trade deal. So I just want to, for our viewers, and not to get hopes high or anything at all, but a US trade delegation led by Deputy USTR, Rick Switzer, is going to be in India this week. They're going to be here 10th to 12th. So I just wanted to sort of, put it out there that this market needs something to turn sentiments around a little bit. And RBI, of course, sounded much more dovish than expected, and that helped the market turn around post that stage, that recovery on Friday, etc. But you need something more durable to kind of latch on to, and this one is going to be closely watched as we go forward.
But they've also said that this is not the official negotiation round, but it's a positive that conversations are happening.
No, it's about tariffs, not the BTA. So they're going to talk about the tariffs, the actual 26% penal tariffs. But the BTA is going to take time, as I think the Commerce Secretary told Shireen as well. Well, let's just quickly run you through the interactions which are lined up here on the program. So as CNBC-TV18 celebrates 26 remarkable years, catch the biggest and most influential voices all day today. We have Nilesh Shah of Kotak Mahindra Asset Management Company, Ramesh Damani of BSC, Manish Chokani of Enam, Sameer Arora of Helios, Ashish Chauhan of NSC to talk about their take on the market and the way forward through the day. Catch top industry voices, N. Chandrasekharan of Tata Sons, Ramesh Swaminathan of Lupin, Rajiv Bajaj of Bajaj Auto, Sanjeev Goenka of RPSG Group, and more. Join us as we sort of ask them what they've made of the journey. Very closely linked, of course, with growth of India's corporate sector, markets, all of it documented and shown here on CNBC over the last 26 years or so. It's a action-packed day. It's a sharp lineup. Shailesh Chandra, Sunil D'Souza, Navneet Munot, Sunil Singhania, Abhijit Roy, and more. So those are voices you will hear through the course of the day on CNBC-TV18.
All right, well, time to slip into a short break. On the other side, we'll go full throttle on all the stocks we're going to be tracking for you in our special Top 10 segment.
Twenty-six years of CNBC-TV18.
Welcome back. It's time now for CNBC-TV18's list of top stocks for the day. And first up, it's going to be Biocon on our radar. Ekta joins in with the news.
Well, yes, Biocon is in focus because they did announce the big news over the weekend. Biocon is going to make Biocon Biologics a 100% subsidiary. They're going to be doing that by issuing shares at 405.6 rupees per share to Biocon Biologics shareholders. Now, the total equity dilution will be around 17.1 crore shares, amounting to around 6,951 odd crores in terms of the share swap. They will be needing an additional 400 million to pay Mylan, which is around 3,600 odd crores, to buy out the entire stake. Now, the company has already taken approval to raise funds of up to around 4,500 odd crores. Biocon Biologics is going to be valued at around $5.5 billion as per the company. You're going to see around a 13% dilution in Biocon shares. This is only with the share swap. Serum will hold around 3.6% stake in Biocon, which is only with the share swap, and Mylan around 6.09% stake. The promoter holding is going to fall to below 50%, around 44% if you count in the QIP dilution as well. Couple of key points to note. The holding company discount is going to go away for Biocon going forward. The overhang will probably remain on the QIP funds, which they need to raise up till the 31st of March, and net debt of around $1 billion. But the company has indicated that the EBITDA and the EBITDA growth should be sufficient enough going forward to cover the debt obligations. The analyst call is going on, so I think the commentary is going to really determine how the stock moves. But let's see. it seems as though the commentary is basically maybe a little bit of the QIP overhang could weigh, but the debt concerns is possibly assuaged at this point.
Okay, all right, Ekta. Thanks a lot for that. Well, let's hop across to Madhya to tell us the latest on Interglobe Aviation. Morning, Madhya.
Well, Indigo is going to be the stock in focus. It's a big day, a very, very crucial day for the airline today. The CEO and the COO have been given time till 6 p.m. Today to respond to the DGCA with a comprehensive, response on why the disruptions have happened at the airline. Indigo is the backbone of India's aviation. It controls about 65% market share of the Indian aviation market, and which is why we've seen that some decisions taken by them, some misjudgments that they caused such a large-scale disruption. Since December 2, 6,000 flights were cancelled, hitting hard about 9 lakh passengers, and we can see so many videos surfacing on social media of passengers stranded, affected across Indian airports. 1650 flights is what they operated, is what they claimed yesterday. And of the 2,300 flights they do, I think the cancellations are still over 500 on a daily basis. So operations, there are signs of operations normalizing, but it is still going to take some time. Big day today for Indigo. They've also set up a crisis management committee internally to look at the cancellations and to look at normalizing operations. They've processed refunds worth 600 crores so far, and they've returned bags, about 3,000 bags have been returned to the passengers, what the aviation ministry has informed. But big day today, all eyes will be on what the Indigo CEO and COO tell the DGCA.
All right, Madhya, thanks a lot for that. And we'll keep coming back to you all through the day to get us the latest on that front. Thanks for joining in. Well, another big stock of the day is going to be Fino Payments Bank. Ritu joins us to give us the latest on that front. Morning, Ritu.
Good morning, Nigel. Fino is going to be very much the stock of the day as well, finally securing that much-awaited in-principle nod from RBI to convert into a small finance bank. And if all goes to plan, it is officially going to be the first ever payment bank in India to make this kind of a transition. Now, remember, they only got their payment bank license in 2017, so this marks a big shift in their journey. For now, they're going to keep operating as they currently do until the final small finance bank license comes through. In terms of what changes, quite a lot if they become a small finance bank. One, and the most important, is they can finally start lending. They can take full unrestricted deposits. They can operate pretty much like a full-service bank. They also get the green light to open branches from day one, although a quarter of those will have to be in unbanked rural areas within a year. They also have to meet key regulatory milestones like hitting 300 crores of net worth requirement within 18 months. They'll have to keep 15% capital, also comply fully with CRR, SLR norms, just like banks do. There's also the big condition for shareholders where large investors will have to pare down their stakes within 18 months to comply with SFB shareholding norms. But overall, this opens the door for them to evolve from just a payment-only digital player into a full-scale lending-capable bank with a much wider product range and customer reach. So going with green with that stock.
Indeed, thank you very much for that. The stock was up 3.5% on Friday as well. Vivek is now joining in to tell us more about the large deal expected in Eternal.
Well, that's right. Expect a large trade to happen, and most likely this will happen in the block deal window itself. As per the term sheet we managed to access last evening, an undisclosed institutional investor. We understand this could be a domestic mutual fund. We are expecting close to 0.5% of the total equity to go ahead and change hands today. Up to 1,500 crore will be the total size of the block. Floor price is at almost just a 1% discount, so 289.5 rupees a share. Now, one thing to note is that, come today, when it comes to block deals, instead of just having a 1% move that will happen in the block deal window, plus or minus 3% stock moves or floor price can actually happen in the block deal window. So expect this particular trade to happen in the block deal window, and post which you may see some recovery coming as far as the Eternal is concerned.
Okay, all right, Vivek. Thanks for that. Well, let's move across to Sudarshan. He's here to give us the November insurance data. Morning, Sud.
Good morning, Nigel. So it's a mixed business update from general insurance companies for the month of November. So we'll start with ICICI Lombard, which has seen a growth of 7% in the premium for the month of November. But if you take a look at April to November data, the growth is just 2%. Even company has lost market share of around 50 basis points year on year. Next is New India Assurance, which has seen a healthy growth. It's growth of more than 10%, but it's much below the industry average of around 22 to 23%. And April-November period, the growth in the premium is up to 13%, and it too has gained market share of almost 60 basis points. Niva Bupa though has seen a healthy growth of almost 47% in premium for the month of November, and for April-November period, the growth is up 18%, and market share it has gained 18 basis points. So I'm going with green for Niva Bupa and red for ICICI Lombard and New India Assurance.
All right. So thank you very much for that. PG Electro Plus is the next one. Upasana is here with details on this one. By the way, I mean, if you remember on Friday, so many of these EMS companies, starting of course with Kames, but PG and Amber and Sirma, all of them sold off. Upasana, tell us more.
Good morning. Yes, so the stock remains in focus as the company has clarified to the HDFC Securities note, which highlighted some of the key concerns in terms of the company's financial health and long-term stability. Now, company states that the article contains certain statements and observations that are factually inaccurate and not reflective of the company's actual financial position. Company has also clarified that it has consistently complied with all the applicable disclosure requirements and all the material information required. It has also emphasized that there are no undisclosed material developments concerning the company's financial health, business operation or expansion plans. And lastly, company's audited financial statement and results are accurately represented. The financial position of the company is what the company has indicated. So this stock will certainly remain on our radar today on the back of this.
Okay, so the company pushing back on claims and saying that the balance sheet is in okay condition. That's PG Electro Plus. Let's see whether it rebounds after the fall that it had on Friday. Ria now joins in to tell us more about Ashoka Buildcon and NBCC.
Well, yes, starting off with Ashoka Buildcon first, the company has received additional orders worth roughly rupees 447 crores from the BMC for the Sion Panvel flyover. Now, as a result of this, the aggregate cost of the project has gone up to roughly 1,574 crores, and the total execution time has now been revised up until January 13 of 2028. Moving on to NBCC, this company has sold 175 residential units at the Aspire Leisure Valley in Noida for roughly 485 crores. So positive news flow for both of them, expected to open in the green today.
Thank you very much for that. I'll also be tracking Yatra and Ease My Trip to see or assess if there is any first order impact on account of Indigo's cancellations, because a lot of the bookings happen through these OTAs. So keep your eye on these companies. A quick recap then of the top stocks. Stocks with positive news flow are Biocon, Fino Payments Bank, Niva Bupa Health, PG Electroplast, Ashoka Buildcon, NBCC. Stocks with negative news flow are Interglobe Aviation, Eternal, ICICI Lombard and New India Assurance.
Time to slip into a short break. On the other side, Dharmesh Kant of Chola Securities will be joining in for some fundamental stock talk.
My heartiest congratulations to CNBC-TV18 for completing 26 years. And to you, Shireen Ban, for your 25th year completion. What an incredible journey that you all have had. This journey has resulted in you establishing yourself as the most credible channel for business news in the country.
"26 years of CNBC TV18.
Welcome back. You're tuned into Bazaar Morning Call. And as promised, we have Dharmesh Kant, Head of Research at Chola Securities, who joins us on the show. Hi, Dharmesh. Good morning. Good to see you again. Well, Dharmesh, let's discuss a few stocks. Top of mind is going to be Biocon. You know, unexpected lines, or what the street expected, was Biocon Biologics business now has come into Biocon. It's going to become a 100% subsidiary. The equity base obviously goes up because of, additional amount of shares that will get issued. But what's your take on it? That holding company discount goes away, the leverage appears pretty okay, but there's a QIP as well overhang. Put everything together, your view on the deal.
Yeah, good morning, Nigel. First of all, happy birthday to you all at CNBC TV18 for 26 glorious year of unmatched excellence. And what is outstanding, Nigel, is that it's not only about unmatched excellence, but living up to the inch of expectation every day when you log on to your channel, and kudos to all of you. Yeah, coming back to, the Biocon thing, I think, see, if you look at Biocon, it's always been a overhyped kind of a company with much of expectations built into it. But last 10 years, if you look at the numbers, they've done hardly on the, profitability part. 9 to 10% kind of a growth has been, that's the best kind of a growth they have delivered. At the same time, the ROEs have been a mid-single digit. With this merger coming into play, it's not that it's value accretive or EPS accretive. I think it's EPS dilutive. First of all, the QIP itself will take care of the dilution. Secondly, there are certain expenses will go up because of the debt burden which will come into play. So 1 year or 1.5 years will go into this entire synergy to play out as per, Biocon's order. And the fact that they are doing this because they feared value, instead of unlocking it would have been value dilutive if it would have gone for, IPO proceed. So those are the caveats in place. Business will continue as usual, nothing great out there. So to my mind, I think I am expecting some sort of a correction on Biocon, and the correction is likely to stay for a year or so till they come to the double-digit kind of a growth trajectory.
Dharmesh, hi, morning. Good to see you here on this special day. Just a quick word on, Upasana, I don't know if you heard, put out this information on PG Electroplast, but my question more was Keynes and actually what happened on Friday. Keynes, of course, is a singular case with specifics there, but market really taking the axe to some of the others as well.
Yeah, good morning, Prashant. It's more to do with the entire EMS play business-wise. There has been a deceleration in the entire EMS space that we have seen, be it PG Electroplast or the others in the play like Keynes, Dixon, Amber. Everybody is facing the heat of decelerating business growth trajectory. At the same time, valuations are not at all comfortable. They are pretty high. And there is a competition hitting up going forward, maybe in the next couple of years by L&T when they foray a big time into this space. So these were already riding onto the play. Keynes, I think that speeded up the selling pressure out there. And with PG Electroplast in particular, the much depends on the transfer technology tie-up with the Chinese company when it gets through. Still, the permission is pending. If that happens, then definitely it will be a different story in the entire EMS space to play out, because compressor technology of the AC is still elusive to Indian manufacturers. So that stands out. But to my mind, I think we can have, today the con call is there, you can have bounce back on some of these stocks, but it would be a bounce back rather than, a structural play into the making. So our call is to avoid the space for some time.
Stock down 43% year to date. Dharmesh, thank you for joining in. Short conversation today, but thank you once again for being a part of CNBC TV18's journey. Now, moving on, Persistent Systems is the first management on the show today as CNBC TV18 celebrates 26 years of leadership. We have with us Sandeep Kalra, CEO and Executive Director at Persistent Systems, joining in. Sandeep, thank you very much for joining in. We're thrilled you're joining us on this special day. The big debate right now is on whether what we're seeing in the global markets with respect to AI is a bubble. Whether all the investments that are going in will be productive, or will we see a crash similar to the dot-com crash? What is your view, and what is the impact you expect on various constituents, whether it's NVIDIA, Microsoft, to startups, and even services companies like yours?
Sure. So first of all, Rima, it's a privilege to join all of you today for CNBC TV18's 26th anniversary. Congratulations to all of you, the entire CNBC TV18 team, for making the channel a trusted voice for all of us. Now, coming back to your question, my short answer is AI is not a bubble. It is, again, there are two different things that we are talking about. One is the technology, the adoption of the technology, the impact in the longer run. The second is the valuations. Now, obviously, valuations is, more, you can find more experts than me, but if we were to look at, in your parlance, the 3-4 constituents. So on one side, we have the chip manufacturers, like the NVIDIAs of this world, the AMDs, the Googles, the players like Broadcom who support all this ecosystem. In our mind, short to medium term, they are the biggest gainers because there's a lot of data center setup and many other things that are happening. And if you look at their order books, they are booked out for the next year, 2 years, and so on. So as far as the AI chip player is concerned, this is less of a bubble, more of a super cycle. Again, I'm not talking valuations. Valuations, there are other experts. If you look at clouds and cloud part, hyperscalers, the Microsofts, the Googles, the AWS, and so on, these guys are spending hundreds of billions of dollars in capex over the years. But they're also monetizing all of this through AI cloud services, developer tools, co-pilots, ads, commerce, depending on their business models and so on. So there is definitely a real revenue for them, real profitability that is being built over a period of time. So there is that component as far as they are concerned. And don't forget, as the enterprises consume AI, build more AI apps, they're going to consume more of Microsoft Azure, more of Google GCP, AWS, and so on and so forth. Now, if you look at the tech services companies like ourselves, we are going to be winners in the longer run on this, because having technology is one part, taking that technology in an enterprise context, building the business use cases, building newer business models, and so on and so forth, it requires a lot of system integration activity. So that's where companies like us, in the longer run, people who invest, understand this technology ahead of others, there's enough and more to be done. So I'll take a pause.
So, will there be a period, a gap period between when, you know, the use cases really start, because right now the entire focus is on, everything is going into building these technologies, and, you know, the race is on. You think it'll start showing up in a big way for companies, Indian IT services companies, maybe, 12 months out? I mean, what's your projection?
Yeah, so if you were to look at it, a number of these people are technology builders. A number of enterprises have already started adopting, while they may be in absolute initial stages. The first thing that people are doing is getting their data ready for consumption by AI. So even people like us are seeing bigger programs on that. So we are looking at AI in three parts. AI for technology builders. So the people we talked about earlier, how do we work with them? From a tech services perspective, what is the market for us? Second is where we are working with enterprises to get them data and AI ready. And even, some of the largest Fortune 500 companies, we are working with them. And we are big winners in the data and AI project related space. And so are a few others in our, ecosystem. The third part is what people call agentic AI. That's in initial stages. For that, you need enterprise-wise data to be absolutely, talking well to each other. Pockets of excellence exist in that. So that's a longer term journey. And I'm pretty sure, all of this for the people who are building the technology ahead of others, it is showing in their revenues. Is it more than single digit revenue today? Not necessarily, but it is a multi-year journey. And let's say 3 to 5 years from now, this should be 30 to 40% or more AI native kind of a journey for many.
All right. 30-40% of revenues for IT services companies.
Yeah. Over the next 3 to 5 years. I'm not saying 3 to 5 quarters.
Yeah. No, I got that. Najal.
All right, Mr. Carlo, let's wrap this discussion up then with a quick word on the Indian rupee, because no discussion nowadays is complete without discussing the rupee. So tell us, what's the impact of the rupee depreciation on your business? Will we see some kind of margin tailwind coming on? And can you do better than that guided 200 to 300 basis points improvement in a bit margin over the next 2 years because of the rupee weakness?
So I'll not do the forward-looking guidance here. We are in the thick of the quarter, so I wouldn't want to comment on that. But if you look structurally over the last several years and decades, rupee has depreciated in a slower manner. Right now, for various structural, reasons, and you talked on this show earlier about the trade deals and so on and so forth. So there are macro that are impacting the shorter term thing. So shorter term, yeah, there will be a currency impact. But look, this industry is built not just on currency impact. That's one enabler for the industry. And I'll say a smaller enabler. In our mind, for the next 3 to 5 years, the biggest thing people have to pivot on is build capabilities on AI. And again, not next 3 to 5 quarters, but next 3 to 5 years, you will see significant amount of tailwind for our industry in this.
Sandeep, thank you very much for joining in. Short conversations. We've got a lot lined up on the show today. But Persistent in their last conversation had also reiterated $2 billion of revenue by FY27 and $5 billion of top line in the next 3 to 4 years. Get into a break. On the other side, technical trades with Sudarshan Sakhani and Mitesh Thakkar.
Years. 26 years of CNBC-TV18.
Welcome back. 4 minutes to go for the pre-open session and about 20 minutes to go for the market open. Sudarshan Sukhani is with us and so is Mitesh Thakkar. Gentlemen, good morning. Special day, 26 years at CNBC TV18, and thank you both for being part of the journey every single day in the morning. It's such an incredible feeling to talk to you on a day like today. Well, let's just look at what happened on Friday, both of you. Sudarshan, you go first. I mean, decent bounce, maybe a little bit of help from the Reserve Bank, 20-day kind of held on and protected once again. Where does it leave us now, Sudarshan? And are there trades to be taken?
Yeah, good morning. Well, we had a minor correction, and then, as you said, the Reserve Bank helped, and maybe the correction was over in any case. We wouldn't know that ever. But the point is that we are back in a trading range. Inside this trading range, we need to be buyers on small dips with a very tight stop at 26,050 in anticipation that this range will break out, maybe. But we still have to be on the long side of the market.
Mitesh, what's your sense on the index, first of all?
Yeah. Morning, Prashant. So I have maintained that Nifty will be between 26,300 and 26,850 broadly, and I think that stance is still continuing. I think this consolidation will help the Nifty eventually to break on the upside, but for the time, I think the signals are not there. So we must assume that the range will be in force.
What about stocks, Mitesh?
Good morning, Nima. I have a mix of buy and sell calls. On the buying side is Cyient. I think after 2-3 days of rally, it gave a pullback on Friday, so it gives you a better entry point. Keep a stop at 1151. Look for targets of 1200. Indus Tower is a buy with a stop at 409 for targets of 430. And on the selling side is ONGC with a stop at 246.5. Look for targets of 230. And Gas Authority, if it breaks 169, short with a stop of 172.25 for targets of 162.
Sudarshan, what about you?
Well, it's almost similar. Indus Towers is also a buy for me with a stop under 410. Another IndusInd Bank, which comes as a buy after a long time with a stop under 855. PI Industries is a buy with a stop under 33.30. And Oberoi Realty, which is again coming in my list, is a buying opportunity with a stop under 16.25. It's an all-buy list.
All right. Thank you very much both for joining us, and come back to you a little later. Appreciate it. We take a break. We are back, and we're going to be talking about, of course, the pre-open session, which should be with us shortly in about 2 minutes' time. And joining us will be some of the big and influential voices who've been part of the 26-year journey. On your screen, Nilesh Shah, Ramesh Damani, Madhu Kela, Manish Chokani, Sameer Arora, Ashish Chauhan, and many more. So we'll, of course, have a special bell-ringing ceremony coming up as well.
"26 years of CNBC. 26 years of CNBC TV18.
Welcome back. Just counting down to the pre-open. You should keep your eye on Interglobe Aviation. That in pre-open is down close to about 10% For starters, because of the flight cancellation, Q3, which is typically a seasonally strong quarter, is unlikely to see that earnings pick up. So that's reason number one. And two, on account of these new, the new rules for pilots, etc., the company perhaps will have to take on more pilots, which also adds to the cost structure. And Interglobe Aviation slammed down 10% lower in pre-opening. Investec has a sell rating, and they've put a target price of 4,040 on that, about a good 20% lower than the current market price. But other than that, it looks like a flattish start. A lot of single stock action should be on your radar. Biocon, positive news flow where the company is looking to make Biocon Biologics a wholly owned subsidiary in a deal valued at $5.5 billion. The only question is, while it's a long-term positive, in the near term, there is going to be some dilution as the company raises money via a QIP to fund the acquisition. Matrimony. I think news was just out that the company on the 15th of December is looking at a buyback and pre-open. It's looking like a big mover. And Fino Payments is the other one we will be tracking today because the company has got the license for a small finance.
All right, Rima, thanks for that sneak peek into all the top stocks we should be looking at. But Sudarshan wakes up early, goes through a lot of brokerage notes, but he joins in to just give us an insight into a few of them. Sud, please take over.
So first one is Kotak Institutional Equities has initiated coverage on Tata Capital, and it has an ad call, and target here is 360 per share. It's a third largest NBFC company with a loan book of almost 2.44 lakh crore as of Q2 of FY26. It has a well-diversified portfolio with a major focus on the retail, which forms almost 61% of the total loan book. It expects ROE to expand to 15.7% by FY28 from a low base of 12.5% that company reported in FY25. Next one is Max Healthcare. Goldman Sachs has initiated coverage with a buy call, and target here is 1325. It expects 23% top line growth and 24% EBITDA CAGR over FY25-28, and it believes that company has highest potential to expand capacity amongst all the peers. Next one, GS on Krishna Medical, that is basically known as KIMS. It has initiated coverage with a buy call, and target here is 900. It expects company to deliver industry-leading top-line growth of 30% CAGR over FY25-28, and it believes that company is well positioned to achieve top quartile return metrics with ROE of as high as 25% going forward.
Okay, all right. Thanks a lot for that, sir. I think we have Hormuz as well that's joining in to run us through some of those shareholder lock-ins that actually open up. Lenskart, Pine Labs, Grow, Urban Company, that comes to an end. Hormuz, tell us, which are these companies that we should be keeping on our radar?
Morning, Nigel. Most of those much talked about IPOs, right, from last month, they should be on your radar this week because their lock-ins come to an end. We'll start off with the ones that end today. First up being Lenskart and Pine Labs. So for Pine Labs, of course, we have close to around 19.8 million shares freeing up today, 2% outstanding, value of close to 500 crore rupees. Then the stock is around about 15% higher from its IPO price. That lock-in ends today. For Lenskart, it's again 2% equity, but around 40.7 million shares that will be freeing up for trade today. 1700 crore rupees is the value here. The stock has remained above its IPO price despite a lot of chatter with regards to its valuations. Now, when you go on further, Grow as well, that lock-in there ends on Wednesday. The value of those shares is well over 2200 crore rupees, almost 150 million shares or 2% outstanding frees up for trade here. And the stock, despite having this recent correction, is up around 50% from its IPO price. And Pine Labs, again, there are two instances when the lock-in ends. Again, on Thursday, actually on Friday, where around 39.7 million shares will free up for trade, 3% outstanding. The value here is close to 1,000 crore rupees this time around. So keep an eye out on Pine Labs today as well as on Friday. And on next Monday, we'll have Urban Company, where the 3-month lock-in comes to an end, where close to around 41.5 million shares, 3% outstanding. The value of those shares is well over 500 crore rupees. So that will free up for trade next Monday. But the bigger talking point, of course, is that the way the shares moved, particularly Urban Company and Grow, those shares are now significantly off those post-listing highs. Grow is down around 23% from those levels. And Urban Company, which made a post-listing high of well over 200 rupees, is now down almost 40% from those levels.
Thank you very much for that. I'll also watch for PVR Inox because of this mega deal which took place where Netflix is buying Warner Brothers.
Yeah.
Now, within this deal, Netflix will be acquiring Warner Brothers Studios. So basically, they will now control the Hollywood content. And historically, Netflix has deprioritized theatrical first releases and they prefer to release it on streaming. So if that plays out, then the big global Hollywood blockbusters which come to the theaters first, especially for PVR Inox, could be impacted, which is why even the Multiplex Association of India has raised some concerns about this mega deal, which is worth more than about $80 billion. But it's also an action-packed week. The big one, of course, is the Fed decision. On Friday, we also have the India November CPI inflation print. That will come out on 12th of December. And if you remember, October was that record low of 0.25%. So we'll watch what the November inflation number throws out. And then, the US trade delegation led by Switzer will be in New Delhi for the 3-day meet. So let's see whether we get anything on that trade deal and if they can iron out some differences. So that's going to be the big one. And of course, IPO action, as Hormus pointed out, lock-ins end, but many new IPOs open today. So that's going to be on my watch list for the entire week.
Okay, all right. So that's all the cues that we have. Mitesh is waiting by to give us his 9:10 call. Mitesh?
I'll go with the buy on sign with the target of around 1200.
Got it. Sudarshan, what about you?
Indus Towers, buy Indus Towers with a stop under 410.
Indus Towers. For Indus Towers, of course, the big trigger will be when we get the AGR relief package from the Supreme Court, because that will be positive for Vodafone Idea, and that indirectly will be positive for Indus Towers. So that will be the big trigger, to watch for when we get details of a relief package.
I think if we still have Mitesh with us, Mitesh, I wanted to ask you your view on Reliance Industries, because that big boy has been holding one end up. It's at a 52-week high. It's been looking quite good. Actually, as CNBC TV18 celebrates 26 years of leadership, Prashant is in conversation with all the biggest and the most influential voices. Prashant, take over.
Well, thanks very much, Nigel and Rima, to you. And it's not just me. There's Nimesh with me. There's Mangalam, who you'll be able to see. And, of course, we are joined and really flanked by some of the best voices, biggest voices.
And the biggest supporters.
And the biggest supporters, absolutely. And, these are people we go to. I mean, you come to us and we go to them to get the view, both market and corporate as well. So really a star-studded lineup. And they've made it Monday early morning to our studio. So it's
only for us.
Really wonderful to have all of you here. Mr. Ramesh, thanks very much. Madhubhai, great to have you. Ashish Bhai has got a function a little later, but he's made it with us. Thank you. Really appreciate it. Nilesh Bhai, thank you very much. Navneet, appreciate it. Mr. Chatwal, thank you very much for joining us. Mr. Damani, it's always a pleasure to have you.
I'm told Mr. Chatwal has created a discount code on CNBC TV18's 26th birthday. It's IHCL26. Type in that and you'll get a 26% off on whatever booking you're making on the Taj.
I think it's a brilliant idea. Let's just go with it.
Let's just go with it.
But not implemented yet?
He just got the idea right
away,
now.
right after this.
I
hope it's not plus 26. As long as minus 26, you're okay.
No.
Market men prefer plus.
We are large-hearted.
Thank you, sir.
I'll go to Ashish Bhai first. I mean, Ashish Bhai, you are the platform on which everything happens. I was putting out data earlier. 26 years, if you look at the market capitalization, 99 and where we are now, 100x is the growth which has happened. And, you were right there at the beginning, if I may say so. Your reflections of what we've seen over the last 20 years.
India has changed. Mumbai has changed. And I recall your office just behind the TV tower at Worli. And you are closer to that now. But basically from there, I think I was probably there in the first debate itself on derivatives.
Right.
And so the only guy who is constant in NSE is me, although in between I also changed. So a lot of things, but markets have given almost 13.5% CAGR. The market cap has gone up 17.5% CAGR, which means more companies have come. In a way, India is becoming more financialized. More assets are getting listed on every count, right? So,
I was just looking at data in 99. The largest, and many of you would recall, the biggest large cap was HUL with a market cap of 50,000 crores. Wow. The biggest small cap, by current definitions, was a company called Foseco India with a market cap of 150 crores. I mean, just unbelievable growth we've seen, right? I mean, this is the average. The largest large cap, the largest small cap, the largest mid cap. I mean...
the market cap of one company is bigger than the total market cap of 1999.
Yeah. I mean, absolutely. 5 lakh crore was the total market cap, and you got...
2-3 lakh crore.
And Nifty was around 1,500, 1,480 or something, if I recall correctly.
Yeah.
And today it's 26,000. Of course, you have to take into account the dividends, but it has been a phenomenal run.
I think one place in India has changed. It is only capital markets, I would say.
Yeah.
By leaps and bounds, whatever number you look at it, number of demat account from 2.5 million to 22.5 million, market cap 130x, the size of the companies, retail investor participation, SIP inflows. It looks absolutely unbelievable, like a story, picture perfect.
question.
Capital
The
market.
money, I mean, we kind of quib and complain about near-term performance and how it's been a tough year. Maybe it's been a tough year, but sometimes when you reflect back over 26 years and the compounding we've seen, I mean, it just tells you to essentially the advantage of staying in the game, right? I mean, being there.
You're right, Prashant. I mean, when I joined, the index was not even 1,000, 1,500, as Ashish said. It was actually the sensex was 800 at that point.
Yeah.
Today we're at 80,000. We had a 100x move right in the sensex, and it's hard to believe today. But when Infosys went public in '93, the market cap was, I think, 40 crores.
Yeah.
40 crores. You couldn't buy a flat in Bombay for 4 crores, and yet you had Infosys market cap 40 crores. Extraordinary journey. But let me just put in perspective for you. Your journey at CNBC-TV18, which we're also proud to be a part of. Helen Keller, the famous woman, once said that a well-educated mind will always have more questions than answers. And for 25, 26 years, CNBC has been providing the answers to the questions that the public has posed.
Yeah.
So congratulations and a happy anniversary to all of you.
Thank you very much. Really well put.
On this occasion, we have another question as well. We'll probably go to Nilesh ji on that one. Last 26 years, the numbers have been phenomenal. For someone entering right now, do the next 26 years look better than the last 26?
Undoubtedly, yes. But in real return, not in nominal returns. If you are expecting 100x in next 26 years, it may not happen because our inflation is down from double digit to mid-single digit, low single digit.
You know, guys, we're being told that 20 seconds to go. तो आप mic मंगलम ले लेगा. आप गॉम उठा लीजिए नीलेश भाई. I mean, I think ये ऊपर, यहाँ पे ऊपर. Ashish bhai. So I think we're going to ring the bell in. By the way, this is only 17 bells to go for the end of the year. That's the other thing. I think. And
both closing and opening.
4, 3, 2, 1.
There we go. Please. Other way, please. Ramesh, please. Ramesh.
Give it a go, give it a go, give it a go.
No, I think...
Many congratulations.
Navneet, I mean, just your reflections in terms of
It's been
what
a
you've seen.
phenomenal journey. As I said, that the largest market cap company today is bigger than the entire market of India.
Yeah.
And our mutual fund industry was less than 1 lakh crore, which is 80 lakh crore today.
Yeah.
And I must say, SDFC Flexi Cap Fund NAV was 20 rupees, which is 2,000. I have to say, past performance is no guarantee of future performance. Mutual funds are subject to market
आज तो नहीं
risk.
बोलना
Offer
चाहिए.
document carefully. No, but the point is, I think it's a phenomenal journey as an economy, and you have played a very big role in shaping policy, in corporate governance, and overall economic transformation of the country. So many congratulations.
Thank you so much.
Let's dive in some strategic thoughts as well. Over the last 26 years, the hospitality industry has seen a big shift, the way people have begun to consume, experience, etc. And similarly, media has also faced that shift. So if there was one thing that you would like to suggest to us over the next 26 years that would be more consumer-friendly, better, relevant, and what changes we should do, what would you say?
You know, consumer-friendly, all service businesses have to be, and they have to keep reimagining themselves. So it's very difficult to say what you do in 2 years, what you do in 5 or 10 or 15. It will keep coming. But definitely where India stands today, where India's GDP stands today, where the capital markets stand today, hospitality, travel, tourism, aviation is bound to flourish. And if we get some kind of change in the mindset and the positioning of the sector, it can grow immensely the soft power of the brand India. I think that's the one major difference versus past. It's not only about consumption. If you want to establish brand India, one of the ways to do it is hospitality and tourism.
Right. And I think Mr. Chatwal has reinvented, reimagined the Taj brand, right? I mean, absolutely over the last a few years coming through. Mr. Ramesh is, of course, with us as well. And, you lead a company and, of course, you're part of an industry which has really been, like IT services, pharma has been really the flag bearer. I mean, there's a soft power, there's export power as well. And I think pharma has played such a big role. And you've been with us over these last 20 plus years. Just your reflections, Mr. Ramesh.
Yeah, so Congratulations in the first instance about your 26th year. Very well done. You've been synonymous with corporate reporting for quite some time now. Speaking about the healthcare industry, pharmaceuticals in general, not for nothing is India regarded as the pharmaceuticals capital of the world. So essentially 40% of volumes in America comes from India. So clearly we have come a long way over the last 20 years, so to speak. And India is also transitioning into more specialty. We've been good at generics for ages now. But if you look at, in fact, some of the firms today, we are looking at pretty, a lot of specialty products. So we had the in-licensing, out-licensing from Glenmark. A lot of other companies also are in the same track that way. Sun Pharmaceuticals has established a name for specialty and so on. Lupin is also going that pathway. So clearly, there's a lot to look forward to. And in terms of healthcare, there's a lot of potential in India, given the fact that there's still huge underpenetration. And clearly, from my perspective and from the pharmaceutical industry perspective, many more miles to cover before we reach any levels of satisfaction, so to speak.
Yes, it's ambitious, absolutely.
By the way, you had an experience of creating 100x in your Reliance mutual fund. Your journey and just to reflect on what you look forward to in the next 25 years.
As I said, it's nothing short of phenomenal, picture perfect, very, very satisfied that we are born at the right time and right place. And it's been phenomenal,
What's been your key learning? I mean, in one or two learnings?
Key learning is just stay. I think stay, believe in India and stay invested, because over the years, so many things have changed, so many ups and downs we have seen. And people who have stayed, I would just like to maybe put things in perspective. It's not 100x, but it's 130x now from 99 to 2026. So someone who just stayed invested is the one who has laughed all the way to the banks. I must say again, congratulations to you guys. I think CNBC has played a very, very vital role in the way capital markets in India have shaped. You've got the best voices. I think a commentary which is completely unbiased, and yet I must say all you guys individually remain so humble. So congratulations to all of you. Thank you.
Thank you so much. I was thinking of what everyone was doing when they were 26. I realized that when I was 26, just below 26, I joined CNBC-TV18 and CNBC turned 26. Mr. Damani obviously was a student, if I remember, in the US around that age.
When I was 26, yeah, probably.
Yeah. So the one thing that has stood out for you is the mastering of multiple cycles. You mastered the IT cycle, thereafter the other cycles that came in as recent as the PSU cycle as well. So, the next 26 years, what's the cycle that you're betting on as of now?
As my wife tells me, Kismat Bulwan to Gada Pelwan. So I don't want to take too much credit for mastering the cycles, Manglam. But having said that, I agree with the consensus in the room that the next 10, 20 years are going to be even better for India than the last 10, 20 have been. And remember, we've gone from 800 to 80,000 on the index. So it's a very tall claim to make. But it just seems we're in the right place at the right time. And I'd just like to add that my generation, Navneet, me, all of you my age, we're part of the blessed generation of India. I mean, we came to markets in the 80s. What happened? The Berlin Wall fell. What happened in 92? Economic liberalization started. What happened in 96? The TMT boom started. So we've been beneficiaries of a huge tailwind that has carried us so far to 80,000. But I think this tailwind of India, the demographics, the digitization, the democracy, will ensure that we go much higher. And I'm going to make a bold prediction because it's your birthday today, that someone asked me yesterday, where is India going to be in 2047, 100 years after independence? I think get ready for us. Index in the 7 figures.
Wow.
Okay.
Wow. Index in 7 figures.
That's about 12% compounded, so not that great as it sounds, but you'll get there, I think. Not 6 figures, 7 figures.
Wow, 7 figures. What were you doing at 26?
I think all of us were very lucky that in early 90s who came to the financial services and saw the entire journey of India. And I think 99, you happened to be at the right time. In fact, some of the largest companies in the Nifty today, TCS, Maruti, Bajaj Finserv, maybe Coal India, so many of them were not present in the Nifty of 99 when you started. So it shows that in next 26 years, we are going to be many giant companies in India, which are like yet to be born.
But which ones would you bet you're on to be the next top
market cap companies.
Invest in the fund. More serious note. I think the compounding story other than United States, India has shown. We had a great campaign, Incredible India in 90s. The time has come, we start another campaign, Inevitable India.
That is something that will be music to Puneet's ears.
Maneet, Mangalam, I was asking that instead of saying what they were doing at 26, let's ask just one round of what they were doing in 99.
Okay, let's do that.
26 years ago. Mr. Ramesh, 1999?
1999, I actually switched to Wazir Sultan Tobacco as CFO there. So that was the change that I was undergoing at that point of time.
Madhubhai?
I was with the broking firm 26 years back.
I was in school.
Birla Mutual Fund. And saw the tech boom of 99 and the bust of 2000. Very interesting days. Yeah.
Lovely. Nilesh bhai?
I was a fixed income fund manager.
Wow.
And as long as I was fixed income fund manager, I outperform all equity fund managers.
I was heading development for Carlson companies that time, today called Radisson Hotels, for Europe, Middle East and Africa, based out of Germany.
Wow. Mr. Damani?
Yeah, well, I was still a broker in the Bombay Stock Exchange watching the rise of tech in India at that time. And I think one of the tributes we should pay in the last 26 years is to the technology boys. I think they've made India what we are. So in the Infosys market of 40 crores in 93, I think what tech has given the pride and the panache to Indian markets, I don't think can be replaced or undercounted.
Okay, quickly, one question to all four the market participants. Madhu, I'll start with you. One stock in the last 26 years that you betted on, and similar thing you can reflect the same in any of the fresh companies or newer companies, which can become the next big thing. One thing that you can think of and highlight. Maybe everybody can.
So my story is very boring, guys. Still the same Divi's lab. It's the same Divi's lab.
For last 26
years. So I think, but Nimesh, I would like to make one comment. A lot of people who are watching us, they must be saying that so much has happened. Yeah. So what in the next 26 years? Yeah. Now you see what has happened in America in last 5 years in the AI boom. Half the market cap roughly is now contributed or influenced by the market cap, by the AI boom. I would say in the next 25 years, the easy part of India re-rating story and multiple expansion has happened. Now the difficult part starts, wherein you have to now really work hard to make the money. The easy multiplication of money because of re-rating out of India may be behind us. But if you catch the industry right, if you catch the companies right, where earning growth is there, still there's a lot to happen.
That's a job cut out for us. Yes.
Any theme, any idea?
Well, I think one theme that I'll say controversially, I think the American century, as we knew it, is probably going to start declining. I have a strong feeling what Trump is doing is absolutely wrong for what is America, tariffs, there's crony capitalism that America is practicing. For India, of course, I think Mr. Ramesh will be very happy. I think pharma will do well over the next 5 years, so which is a rare call for me, sir. So I'm
pharma over the next 5 years.
Anything that stood out for you last 26 years, which can probably reflect again in next 25 years?
So 26 years ago when market used to correct, we used to go to investors, stay invested, be a long-term investor. Now when markets correct, investors come to us, Nilesh bhai darna mat, gore ko khali kar dena. But the real change which has happened is not just the mindset. 26 years ago, our investors were urban India, male, upper middle class, super rich. Today my investors are urban, semi-urban, rural India, male as well as female, and not only the upper middle class and rich, but also the lower middle class. 100 रुपए की SIP करके लोग अपने ख्वाब हमें दे रहे हैं.
I remember last year I complimented Shireen for Young Turks, 25 years before the startup became a buzzword. Startup is the new guitar in colleges today. And we have seen the journey in the last few years. But you look at like 90s, even an SDFC Bank or so many companies is standing here. And many other companies, the way they have compounded. I think they were a small startup and today giants from a global standard. I think we are going to see the same in India over the next 25 years. And best way to invest is through our funds.
If you had to ask the corporate leaders here as well, when hospitality boomed, a large part of that was led by luxury. Do you believe the way, fashion has become affordable, the next leg of hospitality also, say, Zudioization of hotels, will that happen as well?
I would not call it Zudio-led growth because we have something nicer. it will be gingerization, of all district capitals of India. And we are just at the beginning. I mean, we'll have 250 ginger hotels in operation at the end of next year. So that gives you a perspective of where we started, where we are. And yeah, we are very pleased. And with all the good investments you make, with all the good returns you make, we are the happiest because you come and spend in our hotels. And please keep doing so.
All right. And, you know, the Indians were manufacturers, pharma manufacturers of the world up until now. Do you think we'll be the pharma innovators of the world in the next 26 years?
I think the first part would be potentially be search and develop. You might actually see a lot of in-licensing opportunities from other parts of the globe and develop it for India and the like. But clearly we are on this track. And at some point of time, we would certainly be looking at out-licensing a lot of products from India. It's already started. You know, Glenmark has done that. But a lot of other corporates would also do this over the next several years.
So more R&D in terms of Indian pharma as well. You know, we're going to toss it back to the studio. Mr. Ramesh, thank you very much. Madhu, I appreciate you coming in. Navneet, appreciate you coming here. Nilesh bhai, always. Mr. Chatwal, Mr. Damani, thank you very much.
Happy birthday again. Happy birthday, yes. Happy birthday.
To all of you and all the best. And I'm sure you create more investors, more wealth, and help India grow. Thank you.
Thank you very much. You know, we're going to toss it back to Nigel and Rima in the studios, and programming continues. Thanks very much.
Well, it's a quietish start right now for the Indian markets this Monday morning. The Nifty is hovering around 26,150. It's a mildly lower start of about 0.1, 0.2%. Mid-cap index is swinging between the red and the green line. The big drag today is Interglobe Aviation. So the downtick on Interglobe Aviation continues, still in the eye of the storm with the flight cancellations. So Interglobe Aviation straight away 3.5% lower. You've got a few pharma names, softish in trade, Sun Pharma, Cipla. Bajaj Finance is weak. Nestle India has corrected about 3/4 of a percentage point. BEL is under pressure. Asian Paints has started off trade on a downbeat note. On the way up, sectorally strength is seen in some of these tech names. So Tech Mahindra, Wipro, Infosys, TCS. If you pull up the tech index, maybe that will give you an indication that sectorally the IT index is still resilient, a gain of about 0.5%. At least the rupee has stopped depreciating. I think that early rate will once again come up. After the dramatic fall that we had last week, the depreciation seems to have stopped on the rupee. HDFC Life is your top gainer, and Eternal, where there was a block deal in the morning, I think at least as of now, it's up in the green, so it's recovered after that block.
Yeah, the large trade is out of the way. The street was sniffing it, and that's got cleared out of the way. And remember, the stock was a 360 rupee stock on the day it came out with its set of numbers. So that's corrected a good 20% from the top. A few stocks in the broader markets that deserve special mention. SPML, Infra, that stock is up 8.5%. So big move is what we're seeing out there. Ashoka, Bilcon as well. There was some positive news flow on that one. That stock as well has perked up a little bit. It's a good move on that name. You have Suzlon, actually, that's moved up. Remember, the stock has corrected from 90 rupees to around this 50 rupee odd mark. But that stock has shown some kind of green out there. And Fino Payments Bank, surprise, surprise, that's one of the top losers. Massive profit taking is what you're seeing on that one. Volumes are very, very high. The stock is down close to around 5%. And just a word on Interglobe Aviation, though the stock is down 3.5%, you know, at the start of trade, in fact, it was down more than 6%. So that's seeing some kind of bottom fishing as well in today's trading session. Net, breadth of the market is negative. The Nifty is down a little bit, but you'll have to say we're still in a bit of a range out there on the Nifty. Until the 20 DMA, both on the Nifty and the Nifty Bank is protected, you know, the bulls will fancy their chances to end the year on a high. The breadth of the market, though, Rima, that's concerning. Even in Friday's trading session, everyone was talking about the big move that we saw on the Nifty Bank. The small cap index was down 0.4%. So portfolios are not feeling good as of now. Hopefully that catch-up does take place, because otherwise it's not feeling like fresh all-time highs.
Indeed, you know, I was seeing some analysis over the weekend that over half of the NSE 500 stocks are still trading 30% below their peak levels, which is why portfolios are not feeling very good. But Fino Payments Bank is actually the surprise stock, 5.5% lower on Fino Payments Bank. Remember, the news here is that this is a payments company which has now got the RBI approval to convert itself into a small finance bank. So as a payments company, it couldn't lend money. It could only accept deposits up to 2 lakh rupees. But now once it converts into a small finance bank, it can lend freely. It'll decide whether it's retail, MSMEs, but it can lend freely. There is no cap on deposits. Though on the flip side, they have to maintain some regulatory requirements. So one would have thought the news news would have been positive, but that stock is reeling under pressure. Biocon too, the news is positive, the long-term promise, but maybe in the near term, the dilution is weighing on the stock, and Biocon has opened up with a cut of about 3/4 of a percentage point. Niva Bupa, that's a stock because I think the November numbers are actually looking good. The November premium went up 47%, with the April-November market share rising by 18 basis points on a year-on-year basis. We will get into a short break with the news. The openings in flat. The Nifty is trading just shy of the 26,150 mark, mile down tick. On the other side, we'll continue our conversation with Indian Hotels' Puneet Chhatwal. Stay tuned.
My heartiest congratulations to CNBC TV18 for completing 26 years, and to you, Shireen Ban, for your 25th year completion. What an incredible journey that you all have had. This journey has resulted in you establishing yourself as the most credible channel for business news in the country.
26 years. 26 years of CNBC TV18.
Well, as CNBC TV18 celebrates 26 years of leadership, we're now joined by Puneet Chhatwal, the MD and CEO of Indian Hotels, who's made his way up from one studio to the other. Thanks, Puneet, for joining in. But, before we get to that discussion, I'm just going to point out the three focal points that we're looking at. The growth roadmap of the next 2 decades, the holiday season performance, what's the outlook on that front, and the macro trends in the hospitality business. Well, Puneet, we're going to touch upon all these three. But first up, what about the recent fiasco with regard to flights not taking off? Indigo, or Interglobe Aviation, which is the listed name, they have been facing some headwinds. What has been the impact on your business? Because a lot of people could not get to their desired destinations. Has it impacted business in any way? Have there been cancellations, any kind of revenue loss?
See, firstly, good morning.
Morning.
Thank you for having me on 2 studios today. There is an impact. It's very small, so the reverse also works. You get cancellations because people could not fly in, but you also get extensions and rebookings because people cannot fly out. So I think in the end, it averages out quite well. The major markets that are important for hospitality sector in India, that's the top 10, I would say, the impact has been negligible.
Okay.
And as we have seen during COVID, this sector is so resilient, it bounces back. And actually just 3, 4, 5 days creates a pent-up demand, and what did not happen in those 4, 5 days happens a week later.
But is it possible to quantify the impact?
It's so negligible. It's less than like 0.1% of our total revenue.
So you maintain that Q3, in the past you've said Q3 PAT is typically higher than the first half. That stays?
It's significantly higher. Okay. So the Q3 PAT is higher.
Significantly higher than the first half.
Higher than the Q1 plus Q2 put together.
Got it.
And that is a trend we have seen in the last, 14 quarters.
Is it better this year?
Of course, it will be better. We still have some time to go, but the trends, the business on the books, all points in the right direction.
And the 12 to 15% top line guidance, do you do better?
I never said 12 to 15. Okay, I said a double-digit growth.
Okay.
Anything between 10, 12 and higher is most welcome. But our base is so high, it's very, very high. So it's not just the percentage. We have to look at the absolute amount.
Well, I'm telling you, the absolute ARRs are moving up. As an interested party, I'm traveling towards the end of the year. Obviously, I couldn't get to your property because the ARRs have moved up so much. but you tell us.
We have just agreed with Mangalam to do a special promotion, IHCL at CNBC 26, so to get 26% off. So he's made that suggestion. We'll work on it. Let's see if we are able to advertise it.
Mangalam, Rima, you continue with the interview. I'll just book my ticket. No. Give us a few details then in terms of occupancy, in terms of ARR as well. How do you see the trend shape up, for the second half of the year? And Q3 has been as good as what you estimated?
So far, it has been as good as estimated. October had both Diwali and Dussehra. So that was less buoyant, but because of that, November was very, very strong. So you have to look October and November together as far as India is concerned. And in December, the first 15 days are really very, very strong. You have also the wedding dates, the auspicious ones, and we also have, state visits. A visit of the president of Russia does make a big impact on business in Delhi.
I want to pick on the point that you spoke about gingerization of hotels, right? Not Zudios, okay, whatever. It's a tough one to say, but gingerization of hotels. So today, Taj, as a brand, contributes about 75% plus to your overall revenues.
Correct.
Now, considering how fast Ginger is growing, or even the improvement that we're seeing in Ama stays, etc., say by 2030, how much do you think the contribution of these newer verticals will be versus what it is today?
So, gingerization of the business would be reflective of the new India and where India is marching ahead in terms of its middle class, low middle class, high middle class, etc. The opportunity is very big, but the revenues in Ginger, you need, like almost 50 Gingers to come to the same level of revenue as Taj Mahal Palace in Colaba. So the revenue will keep coming and the profitability to a big extent, which could be 60% from the Taj brand itself and 40% over the other brands by 2030. It could look very different by 2047 when India is at 100, where Taj may come to 50% of the total because other brands would have scaled up. But Taj will always occupy the larger share of the pie by virtue of having presence, let's say, in London. One hotel in London or one in New York contributes, it's a very big amount of revenue.
So the numbers you shared, 60% of by 2030 and by 2047, it will be 50%. That's 50. In total number of hotels, not in terms of revenues.
No, in terms of revenue.
In terms of revenues.
In number of hotels, Ginger will grow much faster. Actually, by the next 6 months, in number of hotels, Ginger would have overtaken Taj. Today, Taj is higher, but in the next 6 months, Ginger would have exceeded that number.
Let's come back to the Taj brand then. And there's a property that we have been speaking about over the last few years, which is Sea Rock. I think I'm getting there. Bandra property, erstwhile Lobby Bar used to be there. All my first dates were there. Beautiful place. But now Taj Bandstand is something that you're looking at. What is the capex you're looking at? And by when do we see completion? Because that's a very, very good location.
Yeah. So I think that construction site is already become busy. We are doing the excavation works. I kind of think, based on my conversations with the teams, anything between 4 to 5 years is realistic because it's 164-meter tall building and we have to also dig deep into the basement, and that's a lot in water. That's why it was called the Sea Rock. So it's not the easiest of the constructions. Having said that, this would be the next iconic asset for India. So like you look at Singapore and you have a Marina Bay Sands, you look at Dubai and you had the Burj Al Arab, I think this will be the iconic statement made by the city of Mumbai, made by the House of Tata, and made by India to the world. And we are very, very excited about it. We will not, kind of become frugal in the wrong places. So whether it's your lobby bar on the floor or on the ground floor or it's the topmost floor of the building, it will be just best in class. That's the whole vision, and the capex would be big. It's already in our books with 1,500 crores, the cost of the land. And a number higher than that would be the final construction and design expense. So because of the land being very expensive in Mumbai, it will be 40-45% of the total capex. And so that gives you an idea. Anything between 1,800 to 2,000 crores is realistic.
So 2030, Rima, Puneet and Nigel will have a coffee over there.
And at that time, we'll probably be at 30% discount. CNBC will be celebrating 30 years.
30, yeah.
So maybe
We are very large-hearted. We can host CNBC, but this was at 26 was meant for CNBC viewers.
Oh, not us. Okay. Thank you, Puneet, always for joining in, and look forward to these conversations.
Thank you for having me.
All right, get into a break then. On the other side, the management of Lupin will join in. Stay tuned.
"26 years of 26 years of CNBC TV18.
Welcome back. Down about 0.25% now on the Nifty and the Sensex. Mid-cap index down 135 points. The advanced decline ratios turn adverse. One stock in the green for two in the red. But let's welcome now in our studio, as CNBC TV18 celebrates 26 years of leadership, Ramesh Swaminathan, who was there for the ringing of the bell, is now with us in the studio. He's the ED and Global CFO at Lupin. I was listening to what you were saying, right? Like, India is known as sort of the generic capital of the world when it comes to pharmaceuticals. But your vision is that we move towards specialities, like more branded drugs, as we look ahead to the next decade. And that is the potential for us. So for Lupin, how will this vision of yours change? What is the current contribution of generics? Because you do supply, I think, 40% of the US drugs come from Lupin. How do the numbers change? First, give us a big picture, and then we'll get down to...
I think it's basically a question of evolution. So essentially, we started off with generics, as did a lot of companies from India. Clearly, America was the El Dorado, so a lot of companies flocked to that, for sure. 40% of the volumes of America certainly comes from India. But I would also add that we export to a host of other countries, including Europe, emerging markets, and the like. So clearly, it is the pharmaceutical capital of the world. And as with evolution, a lot of companies would like to transit to more specialty, and that is indeed because we need to grow up. So clearly, IP-driven products would be the way forward. We have also forayed into specialty, if that's what you are.
You have, yeah?
Yeah.
All right. What is the contribution today of specialty, and what would that number look like?
Currently, we have a number of products. So we have products in, but this is across the globe, so to speak. We have products in Canada. We have a couple of products in Europe and the like, and so on. Our total contribution is close to about $80 million, so to speak. But clearly, with this foray into Visupharma, into ophthalmology, this is set to go up dramatically. This is doing about $50 million, but over the next several years, it will certainly blossom into a much larger number. And that's the way we see things going forward for us.
All right. Hi, sir. Welcome to the studio. Thanks a lot for joining in. We want to get some clarity as well, because the street has been a buzz with some reports which suggest that you're looking to buy UK's largest nutraceutical company, which is Vita Biotech, I believe. And the valuation could be, 1 billion pounds, I believe. And your talks with PEs. Clarify on that front. Is there any truth? Are you looking at it, or no truth whatsoever?
Honestly speaking, there are a number of propositions that come our way, and we keep evaluating a number of them, clearly because of the fact that we need to see whether it is a strategic fit and the like. So from that perspective, there are things that we certainly look at, but doesn't necessarily mean that we need to pursue every opportunity that comes our way. So as long as the proposition is compelling and it's something which fits into our overall strategy, we would look at it seriously. But nothing like that at this stage for Vita Biotech.
But strategically, this does fit into your thought process in terms of direction, at least?
I might not
It may or may not move into a transaction, or may not get concluded. But it's an asset that you all would like to look at it?
We would like to look at certain parts of it, if at all, but clearly the full asset is not something which might be interesting because it is actually present across the globe. It's more nutraceuticals and the like, and clearly it has got a very different kind of a flavor, so to speak.
Okay.
So I wouldn't actually say that this is something that is very strategic to us.
Ramesh, you were saying that how, with the evolution, the shift has taken place away from US to other markets. And like Visu Pharma, that's the big acquisition that's going to conclude in December. So from an M&A point of view, are the Europe-UK markets a bigger M&A focus for the company compared to US now? And how much capital are you looking to deploy for M&A? Do we have a number?
Okay, a number of questions in the same breath, so to speak. But clearly, America started out as being, a feast of several kinds, essentially. But the feast sometimes turns out to be a famine. So clearly, one has to look at diversification, and other markets are alluring enough. Europe might not necessarily have the same kind of flavor in terms of realizations, but it's a less volatile market from my perspective. And of course, emerging markets have their own flavor. India is, of course, extremely alluring, and it's a market that we would like to invest a lot in. Other emerging markets, of course, carry risk as well as potential and the like. So from that perspective, we would be looking at various buys, so no market is actually cancelled out, but I think the capital allocation policy itself is very well framed from our perspective. In terms of horsepower that you spoke about, I would say that our overall limits to borrowings would be twice that of our EBITDA. That would potentially make it about $1.5 billion to $2 billion, so to speak, over time. Our sweet spot would potentially be about $250 to $300 million. But we've also clearly drawn out thresholds in terms of where we would be investing and the like. It would be potentially in India. It would also be specialty in various parts of the globe. And clearly, Visu Pharma is a reflection of what we have just done.
What about INR depreciation? How is it impacting business for you and numbers?
INR depreciation always helps exporters, as you would appreciate, because the realizations go up. From that perspective, it certainly adds to our EBITDA margins and the like, and we are happy about it. Though, of course, it has got its own connotations in terms of pricing and, of course, in terms of input costs, if you reflect on that.
All right. So if you're talking about margins, I think for the last quarter, the adjusted margins were closer to 30% odd. But you have been maintaining that mid-20s is the number you're looking at. So what should be the margin guidance from here on, given that, business is doing pretty okay, going by what you're saying, and also you have this tailwind now with regard to the rupee depreciation. Does it help? Give us a guidance.
Clearly, we are being very cautious when we actually guide for this. And for example, tolvaptan, so we expected the loss of exclusivity to click in on 13th of November, but though there have been a couple of approvals, they have not launched, so the party is still on insofar as this product is concerned. Clearly, we look at, maintenance of this, of the margin, so to speak, but I think the truth is, when you actually launch a generic product, it lasts for some time, and after that, it price erosion clicks in, and it's a bit like running on the treadmill. It has to erode at some point of time, and from that perspective, we believe that for the full year, about 26% would be very appropriate for our guidance. But clearly, we are confident about stepping up on the margins over time for sure. Next year, for example, we're guiding for close to about 24-25%, so to speak, because we do expect certain molecules to decline from a competition perspective, more players coming in. So shares let it be.
Got it. Just a quick final word on the two plants, Goa and Nagpur. There were some observations. How serious are they? And by when you expect things to get all clear?
As with everything, we play a lot of reliance on compliance and the like, and we are certainly we are working with the authorities to make sure that it is remedied. It is where it is, but we are confident of actually getting this remedied as early as possible.
We have so many more questions, so we hope you join us soon again. But thank you, Ramesh, once again for being a part of CNBC TV18's journey and coming here down to our studio to celebrate this special day with us.
Always a pleasure. Thank you very much.
Thanks a lot.
Thank you. By the way, markets continue to slip and now below 26,100. So it gives us the perfect segue to invite Rohit Srivastava, founder of India Charts and Strike Money, on the show. Rohit, thank you very much for joining in. This is Rima here. Wish you would have joined us in the studio today. But how are the charts looking, and what is your near-term, medium-term view on the markets now?
Yeah, I wish the entire CNBC team on this special day, 26 years is a lot, and congratulations to all of you for having made it through this, and I'm sure there'll be many years to come. So wonderful job by all of you. And coming to the market, my sense is that we are still consolidating inside this congestion. 26,300 on the upside, 25,800 on the downside. I don't think there's a lot of downside beyond that. I do think that the markets will consolidate and eventually break out on the upside. It may be taking time, but the eventual direction is going to be higher, is what I think as far as the Nifty is concerned. On the Bank Nifty, around 59,000, I think, is the critical support. It's managed to hold on to that 20-day average for quite a long time. And I think it should probably continue to do so. So, in fact, Bank Nifty is probably the outperformer of the lot. Banking stocks have done better than most other sectors and should continue to outperform going ahead as well.
Okay. All right. Hi, Rohit. Good morning. Good to see you in. Give us a couple of levels. You believe the Nifty is headed higher? Oh, where is it headed and who leads us up? You know, as you said, the Nifty Bank is looking good. Almost went to that 60,000 odd mark, slipping a little bit as we speak. But levels on both these two?
So I think we go towards 26,800, eventually maybe cross 27,000 next year, but 26,800 is going to be the next level we'll be watching for once we complete this consolidation and break out above 26,370. On the Bank Nifty, initially probably 61,800 and eventually maybe around 64,000 is where it should go to. So both of them should continue to make new highs into the year end or apart from the near-term setbacks that we are seeing, mostly because of, I think, the small cap index, which is still weakening today.
Any stocks, Rohit? Any trading ideas for the medium term?
So I think I think the interest rate sensitive sectors, they come out on top. They are also been the best performers over the last month, which includes auto, banking, but I would also include metals, which is not up there yet. But I think commodities as a segment will do well given the rate cycle, given the potential direction of the dollar. And therefore, that would be, the third sector to really focus on. So banking, autos, metals, I think are the easy ones to latch onto.
Any word on gold, since you're talking about metals or any other metal, base metal, precious metal, if you like anything from there? And also quick word on the Indian rupee if you've tracked the charts.
So on the base metals, I think they're going to do better than the precious metals, at least for the initial period of this year. And if it comes to equities, I think 2026 will be a year where equities outperforms gold. I know 2025, we've seen gold outperform equity. But if I look at the monthly chart of gold, the RSI is almost 91, 92, and that's extremely overbought. So I think it's a little risky to be in gold right now from a 6-month perspective. But I don't think that's the end of the gold bull market long term. Over 3 to 5 years, it might still eventually make new highs. But right now, I think it's a good time to shift that asset allocation away from gold towards equities. That will probably do better. However, the base metals, as you mentioned, are actually picking up because when we go and look at prices of copper, aluminium, zinc, all of them have actually moved up over the last 2-3 weeks, gaining meaningfully. And I think the direct impact comes on commodity stocks. We are not seeing that so much in the domestic market. But if you look at the Dow Jones Industrial and Metals Index, it's actually made a new high and it started to trend higher. So I think we will see that in Indian metal stocks as well. Actually, Indian metal stocks did pretty well last year, making new highs. So I think that is probably the reason they are not exactly tracking that move, but they will continue to do well. So I think base metals over precious metals is what I'm saying, and equities over gold is also what I'm saying. But when it comes to the currency, which also helps the commodity trade, because in India, when the currency weakens, commodity prices also inch up. I think the worst for the rupee is probably over here at 91, 92 range. I don't think we will go significantly above 91 level. And we should probably see strength in the rupee going forward.
Right. Rohit, thank you very much for joining in. In fact, Biocon is on our radar. This is on the back of the company looking to make Biocon Biologics as a wholly owned subsidiary. Ekta spoke to Kiran Mazumdar-Shaw on the deal. Listen in.
Two things that basically, I guess, swung it in this direction. The first, of course, was a holding company discount. And the second was the perceived debt overhang, which we basically acquired because of the acquisition debt. When we acquired the commercial interests of Viatris at Biocon Biologics, it was done with the aim of creating a large global enterprise, a very uniquely positioned integrated biosimilars company, which we thought would be rewarded, because I think that was the first time it was being attempted in India. And it was the biggest biopharma acquisition ever done, 3 billion plus. And we were a bit taken aback. We were very disappointed that we were actually penalized for doing that acquisition. And we saw Biocon's stock take a beating. And the reasons ascribed were that they were very uncomfortable about the acquisition debt. And coupled with the, as you say, the holding company discount, we saw a huge devaluation of the Biocon stock. And that, by extension, lowered the intrinsic value of Biocon Biologics. So the whole, approach or the strategy of saying, let's take Biocon Biologics public because of this acquisition, which anyway has made us into amongst the top 5 biosimilars leaders globally, was not being met in terms of our objectives, our stated objectives. And we felt it was intrinsically undervalued. Now, with that in mind, we said, let's look at what's the best value accretive step we can take. And that's when we mandated Morgan Stanley to evaluate all the options for value unlocking.
Okay. Well, interestingly, now you'll have Serum hold around 3 to 4% stake in the company, in Biocon. You have Viatris, which will hold around 6 to 7% stake as well. Just give us a sense in terms of what the relationship with such large shareholders would be, or such strategic shareholders would be with Biocon.
I mean, basically, when we look at all the strategic investors, like you mentioned Serum and Viatris, I think it's really about how long they want to hold that shareholding in Biocon. But more importantly, I think the business that we are running, which is a biosimilars business, has a force of its own. And I don't think any of the strategic investors really would make a big difference to our path ahead. So whilst I welcome their presence in the Biocon shareholding, I don't know whether it would really influence the way we are building the biosimilars business. I think this is an opportunity for us to really now create a large biopharma enterprise which combines both biosimilars and specialty generics, especially when it comes to what I describe as diabesity, because we now will be the only company in the market globally to have a portfolio of interchangeable biosimilar insulin analogs complemented with a growing portfolio of GLP-1s, and that makes us very uniquely placed.
Absolutely. I'm going to get to the diabesity opportunity in just a bit. But one of the speculations, might I say, which might emerge is that Serum holds stake. We have Mylan, which holds stake in the company as well. And there's always been speculation about Biocon's succession plan. So would that be an assumption that maybe the Serums of the world could possibly increase their stake, would probably approach you for maybe even buying out Biocon?
I don't even think that's really on the table, because I think, people talk about succession planning, and I really don't think people should worry about succession planning. I think we have an excellent management team. I think Biocon is professionally run. We have an excellent, board. Board succession has been very well managed, and I really don't think, we need to really think about any of the companies that you mentioned as having to be considered in a succession plan. So at this point in time, I think we are very well set up to drive the business in a very professional way, in a leadership manner.
26 years of CNBC-TV18.
Welcome back. Markets a little bit lower, but it's a good time to welcome our next guest, Pirojsha Godrej, Executive Vice Chairman, Godrej Industries, who joins in. Hi, Pirojsha. Good morning. Thanks a lot for joining in to celebrate our 26th birthday. Appreciate it.
Good morning, Nigel. Great to be with you, and congratulations to you and all your colleagues on this milestone.
All right, Pirojsha, we've got a few questions for you, but just to run through a few discussion points, that we're going to be focusing on properties, we're going to be focusing on which stage of the cycle we are at, the project pipeline, project funding as well. We'll also discuss the consumer business, demand outlook, commentary with regard to competition, and scaling up the acquisitions. Pirojsha, let's start with the real estate piece first. How's demand on ground? Are you seeing enough traction? The stocks, all real estate stocks have come off quite a large extent from the top. But on ground, how is demand? Is it still strong enough? And also, if you could give us a sense in terms of your analysis, which part of the cycle are we in for the real estate sector?
Yeah, I think, demand in the sector has actually been very robust for the last few years. We've seen Godrej Properties, for example, a compounded growth rate over these 3 years of over 50%. And we continue to see good traction in the current year. Even last quarter, our booking value growth was in excess of 60%. And I think there's a very strong outlook likely for the second half of the financial year as well. From where we are in the cycle perspective, Nigel, it's hard to be very certain, but my sense is that a typical real estate cycle in India has usually lasted between 7 and 9 years each end of the cycle. And I think this cycle upswing started around early 2021. So we probably are at the mid stage of the cycle, and I expect positive momentum to continue until at least 2028 or 2029.
Pirojsha, hi, this is Rima here. Nigel, CNBC is carrying a legacy of 26 years. But here is the Godrej Group carrying a legacy of more than 125 years.
Wow.
Built on trust, innovation, and just staying relevant. So it's apt that on a day like today, Pirojsha, you are joining us. So thank you very much for being here with us. So just continuing with, real estate and the momentum that we're seeing, up until now, growth for you was driven by, Mumbai, Bangalore, the NCR region. But now you're also expanding outside into newer cities, like you've got land parcels in Kolkata, Ahmedabad, Indore. So as you look ahead, say 5 years down the line, what would your revenues look like from the current 5,000 crore rupees? And what will be the contribution of newer markets? Can you give us a big picture and some guidance long term?
Thanks for your kind words, firstly, Rima. Look, I think the company is all set to scale very rapidly in the years ahead. If you look at how the accounting in the industry works, you're accounting for projects only for most developers, accounting for projects only once they are completed. So we have seen, as I mentioned, a 50% plus CAGR in our booking value, which will translate into our accounting revenue over these next few years. So while you rightly said our accounting revenue is only about 5,000 crore last year, our booking value last year is about 30,000 crore. So you should expect Godrej Properties reported revenues over the next few years to get to those kind of levels. And from this high base, we still believe there is a huge opportunity to continue to compound at, say, 20% a year. Because if you look at it, while Godrej Properties was the largest developer in the country by sales value over the last couple of years, we estimate our market share at only about 4.5% or so. So we think there is a huge opportunity to both participate in market-led growth, but also to continue to gain market share. We've almost doubled our market share in the industry over the last 4 or 5 years, and the goal will be to continue to gain market share. So I certainly think the opportunity before the company is a very large one, and we can certainly hope to see a very significant increase in numbers. And a lot of that has already been locked in through operations that will reflect in the P&L as these projects are completed.
All right, Pirojsha, let's turn our attention into the consumption space. Since you're talking about market share, what about in the consumer space? What kind of market share do you look at? How's the competitive intensity as well out there? Help us out with some guidance on that front.
Well, it's interesting. I think there is something to the kind of K-shaped recovery that a lot of people have talked about post the pandemic in India. We've certainly seen higher income asset classes like real estate performing very well. There has, as you know, been a bit of pressure on demand in the FMCG space, but I think we're quite excited about the steps the company has put in place and about the overall FMCG opportunity long term, which continues to remain robust. So I think in the short term, we're focused on establishing category leadership in all of the markets that we're present in consumers. So for example, we're already today the leading player in household insecticides, in air care, in hair colors. We have a strong number 2 position in soaps. So the goal there will be, again, to, in all our existing categories, establish leadership positions. We also want to ensure that we're increasing our total addressable market on a consistent basis. Sudhir, the CEO, has worked on a plan to look at what we expect FMCG in India to look like in 2040, basis how the categories have grown in other developing countries, and have kind of backcasted from there to see what are the categories that we as a business should be in. And have taken several strategic steps to make sure we are addressing those. So, for example, we expect perfumes and deodorants to be one of the largest segments within FMCG in 2040, which it isn't today. We've tried to address that by establishing a strong position through acquiring Raymond's FMCG business, which has a large perfumes and deodorant play. Similarly, we expect pet food to be a huge opportunity. Pet care, if you look at globally, is a huge market. Somewhere like China now, it's been quite crazy to see the growth in the number of pets. You've had statistics cited that there are now more pets in China than children under a certain age.
Yes.
I think this is a huge opportunity here. We've entered organically through a brand called Ninja, which is in its very early days, but something we're extremely excited about. Similarly, if you look at home care, we've entered through Fab, the liquid care market, and that's been one of the fastest growing products in any FMCG category. So I think this combination of focusing on the core, trying to establish leadership positions in all our existing categories, while making sure we're laying down the bets for the future categories, is how we're approaching the business.
Pirojsha, are you still on the prowl? That male grooming business is what you bought. Any more inorganic growth should we be looking forward to?
Well, I think we have a clear preference for organic growth. I think that's where we think, most value can get created. But where we see exciting opportunities, we're certainly on the prowl, as you put it. With Instack, for example, we thought it was a great business, relatively small in scale, but already very profitable. I think the team there has done a fantastic job using influencer marketing and things like that to ensure the brand has scaled quite rapidly entirely online. We hope to now take it offline as well as learn some of their tricks on their online marketing capability.
Pirojsha, it's always a pleasure having you on the show. Thanks a lot for joining in, celebrating this big day with CNBC-TV18, and thanks for supporting us over the last few years, and looking forward to your support over the next few. Have a great day ahead, and we catch up soon.
Great to be with you. All the best.
Time to slip into a short break. Lata's waiting for us on the other side. She's got the management of PNB. Don't go anywhere.
Years. 26 years of CNBC-TV18.
"26 years of CNBC-TV18, and I have been in the company for 24 of these years. Thank you, viewers, for watching us, trusting us, and questioning us if we don't question our guests enough. We have brought you and will be bringing you the best and the brightest of India Inc. today, as we have done all these years. And joining me now is the CEO and Managing Director of the second largest PSU bank, Ashok Chandra of PNB. Mr. Chandra, good morning, and thank you very much indeed for joining us on a very special day. Well, let me let you in on a secret. Our birthday is actually December 6th, and we wanted to celebrate it on Friday. But we anyway had the governor for the better part of the day. We had the SBI chairman. So we decided to celebrate our actual party day with you. And therefore, thank you very much for joining us.
Thank you. Thank you very much. I think on my personal behalf and on behalf of the entire PNB Parivar, We wish the CNBC TV18 team a very good luck and all our good wishes. And we are very confident that the momentum which you have brought it in the system and your insights on the finance, banking, and the Indian economy, global economy will continue to enrich the people going forward also.
Thank you
all my
so
good
much.
wishes.
Thank you so much, sir, for that generous praise and for the responsibility. Let us get to brass tacks. As soon as the governor announced the rate cut, we saw that home loan cut being announced by Punjab National Bank. But clearly, deposits you all have not cut. You think there is no space for your cost of funds to go down?
See, we have already done two exercises in two phases in the deposit front. One, we had done one exercise in the saving deposit, and we expect that with this 25 basis point cut, is not going to influence the rate cut in the saving deposit. That is the first thing.
Okay.
Saving in the term deposit front also, we have done the rate cut in the fixed deposit, whereas we had that special deposit scheme. We have brought it down, and with this 25 basis point cut, I think we are going to absorb it in our system. And going forward, we will see in the Q4 how it pans about, and then we will take any decision. As of now, in this particular quarter, we are not going to cut any deposit rate now.
So what happens to your margins? In Q2, your margins dipped by 10 basis points, and you said this is about the worst. Will you experience more margin push now, this Q3 and Q4?
See, we had indicated that if the status quo is there, I think I had already given the clue also that around 5 to 7 basis point improvement will happen in the Q3. Now, we all know that the 100 basis point CRR cut which has happened, and the full benefit which we are supposed to get, we have got that. So almost 15,000 crore PNB has got, and that amount has been released. So we expect that whatever the benefits that is going to accrue with this release, I think that is going to offset this 25 basis point cut which has happened in the system. We have calculated what is the impact that is going to happen on our NII. I think around 100 crore is going to impact in our NII in this particular quarter. And going forward in every quarter with this 25 basis point cut, I think around 325 crore will have the impact on every quarter. The way the credit growth is happening, I think definitely I am very confident that the guidance which we have given, we will be able to hold on to that level.
Okay. You did 10.5%. Now with the rate cut, will your advances growth be even better?
Yeah, we are expecting in this particular quarter, I think 11 to 12% growth should happen.
Okay.
QOQ, if you see the last quarter also, we had a good growth, especially in the corporate segment. The last quarter also, QOQ, if you see, it was more than 3%. And in this quarter also, I think the QOQ growth will be around somewhere 4%. And 11 to 12%, definitely I'm expecting the credit growth will happen.
Which verticals are demanding maximum credit?
The retail, definitely there is a very good push is happening, especially the vehicle loan front, 30 to 35% YOY growth is there now. Housing is also doing very well. So the momentum which was there in that Q2, I think there is some improvement further it has happened in the Q3. MSME, we had grown at 18.6% in the Q2, and that trend is continuing in this quarter also. Corporate loan book, I think if you see our Q2, we had shown a growth of 7.5% in the Q2.
Yeah.
There has been some good improvement happening in this Q3, and I'm expecting that we'll be nearing touching to that double-digit mark, and that will be the real good improvement happening in the system.
Oh, that is good news. The State Bank of India chairman was hoping that there will be capex growth. He was saying there's corporate demand, but not yet capex demand. What is your sense? Do you think that private capex demand is picking up at all?
I have started seeing that trend happening somewhere from the latter part of October onwards. And that is the reason I have indicated this figure. And that is happening in the various segments in the corporate loan book, whether you talk about the renewable energy or the infra, power in general. Then there are other InvITs are there, retail InvITs, data center. I think various segments, the traction has started happening in the corporate loan book. And that is a very good sign for the economy as a whole.
Okay, sir, before I let you go, Any word on mergers or consolidation? We heard some buzz. Will PNB become bigger because of some inorganic acquisitions of banks, consolidation?
I think we need to wait and see how this entire thing happens. And see, today PNB is one of the strongest banks in the country now. And if you see our balance sheet size, the qualitative improvement that has happened in the different ratios, I think we are well poised to take any such decision happens in the system. I think we are capable of handling anything in the country.
Okay. Just a word, when you spoke about margins, this quarter also margins will go down. You were about 2.9%. Will you see a further dip in margins?
No, our domestic margin was 2.72% in the Q2. And I'm expecting that I think we will be holding to that level.
Okay.
Around 2.7 to 2.75, definitely this level will be there in the domestic NIM.
Okay, okay. Have to leave it, sir. We have a string of big and best and the brightest from India joining us. And thank you very much for being part of our celebration today.
Thank you very much, and my pleasure to be with you. Thank you.
Okay, well, that's the word coming in from the second largest PSU bank. He says he's capable of handling any consolidation, so not ruling out that maybe something will come. Let's take a break on that note. Up next after the break will be Chartbusters.
"26 years